Boom. We are live, ladies and gentlemen. Thank you for joining us today as we go over a little bit of morning market meditations. Our thoughts here mostly focused on the age-old story in speculation, the bull versus the bear market. Now, these symbolic animals, I think, are probably often overlooked in the important parts. We've gone over this a few times. One of the reasons why we think it's so important to understand a bear is because bears are really good at accumulating and foraging. Anytime we see a downwards fear cycle, if you use that fear to instigate your ability to accumulate, understanding that speculation to the downside is always irrational when people are scared, and always irrational when people are greedy, we're going to use some fun sentiments here to kind of overshadow and take a look at this idea. So we're just going to jump into the charts. We're going to go over Bitcoin to start off with, the Fear and Greed Index. We're also going to look at the S&P 500. I think that right now there are a few areas of Tesla as well that will kind of highlight one of the ideas that we've been looking at, which is the nature of, I guess it's fractals to some degree. So I was going to hopefully be able to share my screen here. There we go. Okay, that should do it. Right now, you can see Bitcoin on the 6-hour chart. We've actually had this chart drawn up for a little while. We were looking for an LPS. We were looking for this second LPS. So this is not unusual to us. Someone in our Twitter conversation brought up kind of a fun way to ask and look at a question. Now, one of the ideas here is that this could look like distribution. This individual trading range right here, and this is kind of the important part of understanding that the universe is scale invariant. So this little red circle here, again, which we have drawn up, let's see, when did we put this? About a week or two, on the 9th of November here. We were looking actually for a return down into this $56,000 to $54,000 area, and we are now moving into this bracket. So the reason this is important, and again, this is a larger macro view. A lot of people are like, oh my God, if it buys here, you break here, it sells here, you buy here, you do this. I want nothing to do with that type of thinking. So what I try to do is take a macro perspective. So we're going to go over a few things today, again, that point us in the macro direction. So number one, remembering that all of these trading ranges are scale invariant. So for the last 2.5, 6 months, we've been watching this primary accumulation range take place after we saw an intermediary distribution range. Now, because these are scale invariant, it's actually just as likely to go and think of this as an entirety in a trading range. Now, one of the reasons why this is important is because it gives us two kind of fundamental factors. Number one, if we close down here, we could come dropping all the way down to the bottom. And this trading range is still not done yet. One of the things that's kind of fun, this is now Tesla. Okay, so this is Tesla over a since from 2011 until today, so approximately 12 years. Right. So what's interesting about Tesla is understanding the way these trading ranges looked. Now, both of these look like they very, very easily could have been distributional trading ranges, especially if you've been studying. You'd think to yourself, oh, this is clearly a rounded top. So we don't actually use Wyckoff to try to predict things because it's very difficult to predict the future. But the market is often giving us clear cycles about strength. So just as an example, we'll go back to Bitcoin. And the conversation here is in the overall fundamentals of strength. So underlying fundamentals of Bitcoin. Governments, countries, cross borders, cross religions, cross space, time, language, all these sorts of barriers have done the same thing. They have always degraded currency. So that's important to remember. If you know that your government is always degrading a currency effectively, how does that affect the underlying assets that you are interested in? And one of the things we know is that if you degrade the currency, the asset price appears to go up. This is what is commonly referred to as inflation, although I'm not sure why they don't explain it as simply as such. As basically what happens in inflation. The currency loses value versus the assets, and the assets appear to rise in price. This is why you have such a dramatic increase in so many marketplaces around the world right now, is that you've had such a massive increase in the monetary supply. So just again to try to highlight this, take a look here at the start of 2020 when the pandemic originally started, and Tesla has gone only up, and not just only up a little bit, only up an extraordinary amount through multiple trading ranges, and it's barely been able to sit still. So we're looking for an end of market cycle, right? And we're actually in a pretty greedy area in the market. Like clearly, this is a pretty well, actually, we could make an argument for something bullish going on here with Tesla. And again, underlying fundamental is that all of these assets, every single one of them, is likely on an upwards trajectory as long as they have some sort of fundamental. So in the long term, even if we come down here, this actually could just be a much larger accumulation pattern, much like we saw in the S&P 500. Here, between the years of 2000 and 2020, we supposedly had 2 crashes. Yet within both of those crashes, all it was an accumulation range before a much bigger market cycle came out effectively. So one of the things that I try to remind myself, and I think this is important here, is that when we're looking at the asset speculation, this story of the bear versus the bull, ultimately the reason why the bear is the most intelligent investor is because they understand the fundamentals of a long winter and foraging and accumulating for those times. So a long winter is always in the downtrend. So in Bitcoin, we want to jump now here to the fear and greed index. Because again, largely what we're doing is trying to measure, is the herd fearful or are they greedy in general right now? This is such an important part, I think, in understanding that speculation has very little to do with the underlying fundamental of the asset and everything to do with the irrationality of the human being. And if you've ever met any human beings, maybe you have, some of them are very, very irrational. And this is what you see in price speculation, is that neither of these, the consequential ideas of a bear or a bull, are important at all. The fundamentals generally stay the same while humans speculate with their irrationality of fear and greed within that market. So we are actually currently in an area of greed. Now, we've stayed moderately greeding. Back in November 2020, when the market was around 30,000 Bitcoin, we actually had a much higher level of the greed index than we are today. We've stayed moderately low, around 70. And I think that what we're witnessing here is actually a more experienced investor in general as the composite operator. So now that everyone that's shown up in this particular sector is generally more competent and adept at what they've been doing it for longer, we're seeing a quelling of the volatility in Bitcoin. We've made an argument for this multiple times, and it seems to be boding fairly well. So at this moment, it would actually be nice to see a reset of the fear portion of this index. And if you look back, if we start this, basically this chart is drawn up like this. Now, I don't think we're going to go that low on Bitcoin. I just want to make an argument here. Let's see. I don't know why I tried to get rid of there. There we go. Let's draw this white line because this is a speculation that I'm not actually betting on right now. But I do suspect that we're going to see another LPS. And we could see an LPS that comes as low as $51,000. Now, I would like it to stay that high. If we start to close significantly below and cannot close back above 57, we could see this much larger trading range turn into one of these trading ranges that we saw similar to the S&P 500 and Tesla, where we come back down to 30,000, spend another 6 months accumulating before moving much higher. So if we look here, this is again November through January, basically November through January here. We were peaking out in the fear. We reset in June, July, which is this portion here. Actually, I'll try to zoom it in, make them a little bit more exact the way each of these pieces look. So we saw fear here, and then a nice chunk of greed. So fear, SOS, and then that brought in the greed. And then the next LPS brought in the big drop in fear here around September 27th. So we see that dip September 27th, 29th on our LPS. We've now seen an SOS, which obviously is greedy, and likely we're going to see another LPS. Now, this is a very important part. So, number one, ladies and gentlemen, if you're new to investing, understand the long-term story here is so much more important than the short-term story. If you are over-leveraged, overextended, you've got more money than you've ever had in your life on the table, it's a good time to take a principal capital. We're in the middle of this market. If you're joining here at this moment now, you were late. The best time to accumulate, like all good bears know, is before the bulls show up and drive the price up through mass and speculation. The best times to do it is when everyone's basically not paying attention to the sector. Now, again, the future here is that consistent investments month over month over month without thinking about the price will always do very well. If you get the fundamentals and the theme right, you can pretty much guarantee that type of success. But you'll often make too many mistakes jumping around within the minutia of these trades. So getting too caught up in, oh my God, is this a double top? And if it is, it comes back down to here. Should I sell here and buy here? Ignore all of that noise, because it does nothing but get in your way for understanding that your success here, again, is almost guaranteed if you follow some simple principles. It's just like going to the gym. We can actually guarantee success to almost anybody if you do the work. And this is one of those fun spaces where no matter who you are, if you do the work, it bodes very well in your favor. Being playful, being open-minded, being like a childlike innocence, bewilderment, and all the crazy stuff that is happening here, and you'll have some fun along the way too. So where does this bring us to next? Is the bull market about to end? No, I still have strong feelings that we're going to go around $100-something thousand by December. Now, we've stayed consistent through that story the whole way through this cycle. Even when we were down here, we're like, okay, well, maybe we see a quick spring down to 24,000. We didn't. Spring only went to 29,000. We were still ultimately bullish, because what I'm about to show you next is the long-term pragmatic outlook to how we got to where we are, and it's an important one. This is a logarithmic chart that we have drawn up in the private group for, I don't know, the last 6 months. We had other renditions of it we've shared on the channel since 2017. This is a logarithmic growth chart. The only thing that we're showing here is the length of each of the accumulation cycles, right? So remember, these are not bear markets. These are fucking times to accumulate an asset that you think is valuable. And ultimately, again, if you do that properly, you'll do quite well. So let's start over here in 2011 to 2012. We had a 400-day accumulation cycle on the logarithmic chart before we continued upwards. Between 2012 and 2013, 200 days approximately of accumulation before we continued to have a bull market upwards. After 2013 to 2017, we had a much longer, much more drawn out period of adoption and accumulation. That took 1,200 days. On the next cycle, between 2018 and the 2020 bull market in which we are in right now, it took approximately 1,000 days. The cycle that we are in right now, I speculated would take around 400 to 600 days. Now, we have just hit the top of this cycle here. As a matter of fact, this would look like a trading range. I don't have this chart drawn up perfectly, but what you would actually see is the finalization of this area is basically identical to the top of this white line here, and it's an intermediate. We are in an area of accumulation. When we hit this high and we came down low, this became an area of accumulation. Even if, let's make an argument just for fun, because anything is possible, even if we come down to 39,000, it is highly likely that this is a much bigger part of an accumulation pattern. So this says 120 days in, this is Bitcoin still at 32,000. This is the first part of this spring here. We were looking at the measurement of like, we are only 120 days into this accumulation cycle. From that day forward to where we are today, we've added another 124 days. Perfect. About half that cycle has continued to get us through this accumulation area. That would put us at around 300 days of accumulation so far since the previous high. Again, if you look at these cycles, on the shorter end, 225 to 400, and on the longer end, 1,200 to 1,000 days. Here, again, I suspect it's around 400 to 600 days before you see that complete run up, and we're at around 300. So things are kind of really well situated that even if we go down here, this is only going to add to the potential of accumulation of an asset that's going to go much higher over the years, because the fundamental is staying the same. Governments throughout, you can go back, again, across borders, across cultures, across religions, across languages. Governments, rulers, whatever, patriarchs have destroyed currencies through inflationary practices because governments are not good business models. They don't produce anything largely valuable. They keep selling you products that they never have to hold up. And man, could you imagine if a government was like a product? You would never buy it again. It always lies to you. You're like, oh, you're going to get this. You open the box, it's something different. What the fuck is this? This is not what I bought. This is not what I paid for. Governments are horrible at their job. They always inflate the currency because they need to do something to try to sell you on the idea of, hey, we're just going to give you free shit. And they've done that again, cross-border, cross-culture, cross-religion, cross-language, does not matter. They've inflated and destroyed currencies time and time again. So the fundamental is actually pretty reliable here. Human nature. It's one of the reasons why this Wyckoff methodology is so interesting, is because really human nature has not changed at all, no matter what the technology, no matter the adoption, no matter how much bigger the market. Humans are exactly the same. Human nature has stayed the same. So these are actually fairly reliable fundamentals for us to go on. Okay, let's see. The next point I wanted to get into, well, yeah, okay. So first off, I'm not trying to predict the market here. Like I said, we took out, I have a habit of taking a few years operating capital out anywhere in the midway of the market, because we're up so significantly. Wherever that is, again, for you guys, for those of you that are new here, if you're having trouble sleeping, you're doing it wrong. If you wake up and check your portfolio first thing, you're doing it wrong. It means you're overextended and you're uncomfortable with what you've done, and you need to find a better way to manage that. Your emotional balance and checkbook is almost equal, or is pretty much equal to that of your regular balance and checkbook, or MetaMask at this point. Your ability to control those emotions is largely your ability to be successful in so many avenues of life. I can't stress that one enough. Let's see. Arfan Body here asks the question, says, my sir, hold my ETH is negative bit. I own like 40 coins. Well, first off, again, it sounds like there's over leveraging in these, or overextension in these conversations. Most people join the market late thinking they're going to get a 10 or 100x in the halfway through the market, when we've already had a 20 to 30x. Okay, so let's look at some of the rest of our positions. We've been big fans of Avalanche since Avalanche was down in the $1 to $3 range. We talked about it. We were largely one of the only groups on the internet at the early days of Avalanche talking about it so proficiently and with the depth of interest that we had. Again, I'm not a tech guy. I just understand signal. You can take that however you'd like. So this thing here, this beautiful accumulation channel that broke up, we saw initially a 33x, and then here we're sitting at approximately around a 40x approximately. So we're already so fucking high since we started sharing these ideas, and since this bull market started. If you have in profit capital, again, my core base function is a few years worth of operating capital, so my businesses can maintain and grow, and I can take the accidentals of anything that might come up. The second thing that I aim for is principal capital. Let's say I put X amount of dollars into Avalanche. Let's $100,000 in Avalanche. It's up at $1 million. The core goal is like, we'll just take out the 100,000 of USD, whatever, and understand that anything can happen. There's literally no risk for you at that point if you measure it properly. The downside is most people get way too excited about unrealized gains, not understanding that if you just let those ride, you'll do much better. This conversation around Musk being like, oh, should I pay my unrealized gains taxes? Well, first off, Tesla was super fucking high. It makes sense you should sell. But this conversation around an unrealized gain, well, if you sell too early, you're just creating a harsh market dynamic to begin with. And if you got it right, why ever sell? But the problem is the gains go up and down. They're not realized. So this argument that Janet Yellen was making is just absolute fucking stupidity. These people have no idea. They are clown, trash, garbage, fucking dumpster fire human beings of the earth that deserve to probably be hung or thrown in jail for the atrocities that they have pushed forward without understanding the consequences of the stupid shit that they say and the laws and the mandates that they try to enact, because they are retards. That's for clear. Someone like Janet Yellen is a clear retard. They have landed in this place. Hold on, hodl on here. Hodl on, ladies and gentlemen. Let's be sure. I have a lot of friends who are, let's say, I don't know how to say this any kinder, and they're going to love me for it anyways, handicapped or something like this. People would be more kind to call them physically disabled. They're some of the most brilliant, happy, loving motherfuckers I've ever known, because they've had to persevere through adversity and remain who they are, and I commend them for being able to choose that spirit of nature. But someone like Janet Yellen is an absolute trash bag of an individual, because they don't have any adversity. So all the mistakes that they're making are from the fact that they've never had anything go wrong, that they've ever had to deal with any type of discouragement or downside in life. Like, they're just throw them away. That's okay. So what was I was trying to get to a point here. Oh yeah, we're super high. We're already like 50x on or 30 to 50x on a lot of these investments. If you're jumping into the market late, trying to get another 50x, it's a bad idea. At least in terms of I want to put all my money in, it's going to happen. It's like focus on the consistent, show up, make good investments, and you're going to have a great time here. Okay, so Avalanche looking great. I do suspect we're going to come back down. We need a reset in the fear sector of this market right now. So I think we're going to see that. And again, this actually could turn into a distribution here too. This could be an upthrust after distribution for Solana as well. And look, you have to remember, go back to my videos in August of 2020, June, July of 2020. We were looking at Solana back at freaking $3. And think to yourself, if I'm jumping in the market now, how much risk do I have on the table? We're up 80x at an average for Solana. And that's in March of 2021. That is incredible. So understand that joining here now and making big investments is not your best bet. Joining here now, understanding how to get yourself in the position to make great investments over the next 5 years, that's how you win this game. I was going to look at Star Atlas and Polis and Tesla and the S&P 500. And again, S&P 500 is actually where we'll end today. I don't want to look at some of the other stuff. Just I think we covered all the valid points we need to for today. But here we go. Okay, so here we go. This is the S&P 500 around the 3-day approximately, around 2020, almost a 2020 here too, ladies and gentlemen. Here, you're ready for a wonderful fourth quarter. Congratulations, you guys. You've made it so far. I want to commend you. This has been a great bull market so far. I hope you have all enjoyed it. For those of you, again, that are new to here, just be patient. You don't learn how to play a good drum kit overnight. And if you think you're going to, like, congratulations, just like everybody else. You show up and think you're smarter than the market. Nope. It takes time, takes practice. Mastery, no matter who you are, takes a lot of work. Unless you're like 3 to 7 years old, and then you can learn how to do it way faster, apparently, but that's a different conversation. So just be patient with your learning process and be grateful for where you are every step of the way. And make sure you're really learning all the security, all of the things that keep you away from scams and fraud, because getting this right is basically easy. You make a good investment and you walk away, and you just keep making good investments and then walk away, and you're going to amaze yourself. So the S&P 500 is peaking into new highs. Again, we've had a 20-year accumulation cycle, so I don't think that this bull market is done. Could it have a big distribution moment? Yes. We have not even seen a new trading range form for the S&P 500 yet, so that's a little worrying to me. I think the moment that we get a real reaccumulation pattern for the S&P 500, that's when Bitcoin's market cycle will be over. So we're going to have to keep a close eye on it. Again, I don't think its market cycle is over. I think closer to December next year, or closer to the end of this year, we're going to see the fireworks in the S&P 500 before it's kind of blow out top for a bit. And then again, I think we're just going to see reaccumulation before further bull market upside, because the fundamentals are the same. Governments ruin your money. They ruin it through currency inflation, malpractice, malfeasance, lying. Governments are basically just some of the, they're not productive. Anyways, whatever. I don't know of anything better either. So I'm not saying like I have a better option. I'm just saying this is not great. I pay to fix my own road. God damn it. Pay for my own Medicare and healthcare too. It's just easier. Anyways, give us a thumbs up if you like this content, ladies and gentlemen. Thank you for joining us on a morning rant here. I always have fun. Hopefully it went smoothly. Leave your thoughts, your comments, your questions down below. If you're new to the channel, please subscribe. Considering hit that little button there, that bell. That way you'll be notified anytime we try to do these. I do not like inundating you guys with noise about, oh, the market's going to do this, it's going to do that, it's going to go here, it's going to go there. It just gets in your way. The more noise you can remove from your life, the better. Shut off TV. Stop listening to shit that gets you emotional, and just remember that this story is actually pretty easy. You found an amazing way to generate wealth and success in your life. Just keep showing up to the gym, keep doing your daily work, and you'll have a great time. Stay with the Arcane Bear. We'll see you guys on the next episode.